We have two very smart gentlemen in from Real Wealth Group. Today we have Roberto Lorne, VP of Sales, and we have Nick Samitas, President and Founding Partner, and they're here to talk about our pick of the week. Some very exciting stuff. So, gentlemen, welcome to the studio.
Thank you, Simon.
Thank you for having us.
All right. So our listeners really love this because they know that we at the Real Estate Talk Show take considerable time in terms of finding the right opportunities. We're not about to put something out there unless we ourselves, of course, are invested in it or would invest in it. So this is important. Our listeners are looking for other options out there. And also, it's a great educational segment. It's an opportunity for everybody to learn a little bit more. So thank you, gentlemen, for being here. So let's talk about, in terms of Syndicate, what is a syndicate mortgage?
Well, syndicate mortgage is simply a form of investment where two or more investors pool in their money to create a single mortgage to fund a real estate development. I guess that's the simplest way to answer it.
Okay, so instead of doing it by yourself, it's allowing people to put their funds collectively. And as a result, it means that it can be of different varying sizes. There's lots of options as a result of that. And really, you're kind of acting like a bank.
Absolutely.
So what is Syndicate? And of course, Nick, I'm going to ask you that.
Well, Syndicate is a product that we created. It really is a platform where you could lend out your money like a bank and have the same security as a bank does.
Yeah, and I've said this before. I mean, the banks and smart investors have figured this out. They figured out that if you want security, you lend against real estate and you have fixed returns and there's no management. You're just lending your money. So it's a really, truly passive, hands-off investment.
As opposed to a piece of paper, right?
As opposed to a piece of paper with hope that the money comes in.
So we already talked about that. So we know that the investment is secured because we're talking about real land. I mean, it's tangible, it's there, it's visible, you can see it. But are there other layers of protection for the investor? So I'm going to ask you, Roberto.
Absolutely. Well, just like a regular mortgage, as mentioned, you are entitled as an investor proportionate to the amount you've invested. Secondly, of course, just like the bank, you will be getting monthly payments. In our case, it starts at 8% annually. It's paid monthly. You also sign, and you have to sign with a licensed mortgage agent. Mm-hmm. And as far as our company is concerned, we are very conservative, and we strongly suggest you get independent legal advice. We do present all the due diligence package ahead of time, from the planning reports to the AACI appraisals, anything you need to know about the project. It normally is given in a binder disc.
Very good. Okay, Nick, what is a negative pledge agreement?
A negative pledge agreement is a stipulation that the borrower, meaning the developer, cannot extract the money that's raised for other purposes. So it's very important that you know that the money that you're investing isn't going to go to another project, someone's cottage, or something like that. Okay.
What about, Nick, the general security agreements? What's that?
A general security agreement, again, is another legal concept which basically provides the lender collateral over everything that the borrower has.
All right. And of course, lastly, what about general assignment of rents and leases?
Oh, very important. So general assignment of rents is basically if the developer has a parcel of land that is being rented, for example, a farmhouse, that will accrue back to the borrower or to the lender in case of a default.
You know, there's a lot of people involved in this kind of a transaction acting as your advisors. I mean, you've got your mortgage broker, a mortgage agent. You've got a lawyer that's going to be reviewing all the documents. You may need an accountant. I mean, who are all the people that you feel are needed to give the proper analysis for the due diligence package?
Well, it really comes from us as the owners and the developers. We do not take on any project that we are not personally involved with. So we feel that if we like the project, if we can crunch our numbers, if we understand it, we can promote it to our investors.
Very good. Now, Roberto, what does the mortgage agent or mortgage broker do?
Well, it's a very important role because one will explain thoroughly what they're signing and also address any financial related questions that the possible or prospective investor needs to know.
We've talked about understanding the due diligence. We've talked about your mortgage broker getting independent legal advice. But Financial Services Commission of Ontario, FSCO, also has a say in this. In fact, there's a FSCO disclosure form required for every investment. Is that right? So do you want to walk our listeners through if they're not familiar with that?
Yeah. So the mortgage industry is very well developed. It's been around for hundreds of years. And FSCO, which is the regulator that governs this area of lending, requires that certain disclosures are made. So it really is full disclosure of all the risks and benefits have to be made to both the borrower and the lender. So the form, they're standard forms that Fisco has developed, and one of them is called a Form 9D, which is a very standard form that everyone has signed when they got their own home or when they invest in a mortgage.
Now, Roberto, what are some of the factors that an investor should take a look at before investing?
Definitely the characteristics of the investment. We feel we need to be closer to the GTA. That way, a lot of people can go to the place.
They can see it firsthand.
They can see
yeah.
it.
Not to mention the liquidity of the market obviously is a big factor too, no?
Absolutely. Other factors to consider, which are very important, are transportation theme. Is there easy transportation system, TTC, LRT? Also, is the general environment, the business environment, is it favorable for investors as well? Also, are there government infrastructure being poured into the particular real estate? So all of these things, all of these metrics come into play when choosing a good opportunity.
So what constitutes an excellent appraisal? I mean, this is a key component when we're trying to figure out what is a great investment opportunity. What constitutes a great appraisal?
One, it has to be AACI. It has to be an AACI appraisal. It's the gold standard as far as appraisals are concerned.
Okay.
They're very conservative. Their education similar to a university degree, plus they have several years of practice. They're also insured, and meaning what they say is gold in itself.
Okay.
So an appraisal is the most important paper to read when making a mortgage investment decision. A bank always looks at the appraisal on your home before they advance funds. So when you're investing in a development opportunity, what does the appraisal really do for you? In case of a default, what is your recourse? So if the valuation isn't prepared in accordance with the standard methodology, you're in risk. So we like to use AACI appraisals because the writer of the report is accredited and has the characteristics and the professional qualifications.
And you actually said you alluded to the fact that they're also responsible. I mean, they have E&O insurance just like brokers
emission,
do,
yeah.
and so on. So there's actually there's the responsibility.
There's a lot of acronyms out there, right?
Yeah.
I mean, just to remind our listeners. So E&O insurance, of course, that's errors and omission.
Yeah.
And it's an important thing, again, to protect ourselves. And But as you were saying, though, Nick, when we're talking about appraisals, this is the gold standard. I have to ask you, what does AACI stand for?
An AACI designation indicates that you are accredited by the Appraisal Institute of Canada.
All right. So what are the common purposes or use of proceeds for a loan?
The proceeds on a loan on a development project is to go to the project to actually fund development expenditures. So you're actually funding things that are going to add value to the land. So those are specifically soft costs of construction. So before a shovel hits the ground, the developer has to go and commission reports, architectural drawings.
Environmental studies.
Correct.
Okay.
And these are things that have to occur before the city or the municipality can actually issue a building permit or issue a site plan approval. So it's very important that these expenditures are incurred and the money goes into the ground. And this comes back to the negative pledge agreement. If the money doesn't flow to the developer and is not spent properly, the project could be in peril.
All right. Roberto, before we wrap up, I want to ask you this. What are the risks involved with investing in syndicate mortgages?
Always three risks involved. First is who are you dealing with? You have to take a look if they are a person of character and are they competent to really push through with the project. That's the first thing you need to take a look at. Next one, of course, is sales risk. It depends on how large, how small the project. Normally, a larger project is more prone to a sales risk because it might need a little bit more time to sell the units. And if there's a downturn in the market, then you could be at risk. Another one, especially for investors, is liquidity risk. It's a fixed investment, just like a fixed mortgage. It has a fixed time period. So a good advisor, a good financial advisor will have to ensure that the exact amount of funds can be kept invested until the maturity date.
Which is sometimes extended due to circumstances beyond any developer's control. Building permits and all the other stuff. But great information today. Obviously, there's so much more to cover, gentlemen, but fantastic job today. We'll have to have you back, and thanks again for being here.
Thank you, Simon.
Thank you for having us.
Yeah, Roberto and Nick from Real Wealth Group. Gentlemen, thank you for a great educational segment. Well done.